Good morning everyone, this is Iosif, analyst at IronFX, bringing you the morning comment for the 1st of December. OPEC delivered a 9-month extension. Yesterday, OPEC and major non-OPEC producers decided to extend the oil production cuts by 9 months, until the end of 2018, as was widely expected. Nigeria and Libya, which were exempt from production cuts, now have been given soft targets, according to news reports. WTI prices declined a little on the announcement, but recovered most of their losses within the next few hours. Moving forward, the outlook for oil remains highly uncertain in our view. We are not ready to call for any rally in oil prices from current levels, considering that any sustained gains in prices could invite US shale producers to boost their production notably, and as a result, limit any future advances on oil prices. The US Senate tax bill vote is expected today. The US dollar tumbled yesterday with no clear fundamental catalyst behind the decline. A couple of likely explanations include rumors that US Secretary of State Rex Tillerson may be forced out, as well as a notable downward revision in the Atlanta Fed GDPNow forecast for Q4. Nonetheless, the dollar rebounded later during the European afternoon, especially against the yen, possibly due to some optimistic developments around the topic of tax reform. The rebound began after Republican Senator John McCain indicated that he will support the tax bill, something that may have eased market concerns that the proposal would encounter fierce Republican opposition. The Senate is expected to vote on the bill later today, and expectations that it will pass appear to be elevated, evident by the continued surge in major US equity indices such as the Standard & Poor's 500, which broke yet another all-time high yesterday. If the bill indeed passes the Senate, then the prospect of a complete tax overhaul as early as this year suddenly becomes much more likely. In this scenario, we would expect the dollar as well as US stocks to come under renewed buying interest. As for the rest of today's highlights, during the European morning we got the final market manufacturing PMI for the UK, which is increased to 58.2 from 56.3 previously, by beating also the expectations of 56.5. British pound strengthened a bit on the news. Also, Canada's GDP for Q3 and employment data for November are due out. Focus may be primarily on the employment data. Should the unemployment rate fall as expected, it could support the Canadian dollar somewhat. From the US, we get the ISM manufacturing PMI for November, which is expected to tick down from 58.4 from previous reading of 58.7. As for speakers, we have 3 on the agenda: Fed Chair Janet Yellen, St. Louis Fed President James Bullard, and Philadelphia Fed President Patrick Harker. For more information, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Iosif, analyst at IronFX, wishing you solid trading.